Good evening, ladies and gentlemen, and thank you for joining us here at the 5th UTI Mutual Fund in CNBC TV 18 Financial Advisor Forum. Well, this forum at New Delhi is actually a part of the 4-city tour that we are on. We were in Bengaluru a couple of weeks back, and soon after Delhi, we will be traveling to Kolkata and then to Mumbai. This is actually a unique platform for mutual fund advisors to engage with industry experts and together to thrash out and develop a strategy for growth. Now, if you all remember, there are only less than 1 crore unique mutual fund investors. There are only 10 to 15 cities where you are seeing significant penetration of the industry, and there are less than 3 to 4% of India's savings which are able to make their way into the mutual fund industry. So clearly there is a lot of opportunity, there is untapped potential in this industry, and the financial advisors have their tasks cut out. And I really hope that at the end of this session, each one of you will be able to take home an idea for personal as well as investor growth. Well, Leo, I just wanted to start off the panel discussion with a direct question to you. What do you think are the challenges and opportunities that lie before the financial sector and before actually the mutual fund industry in particular?
Mutual fund industry is more at this point about opportunity than challenge, but I'll just briefly touch upon the 2 or 3 major challenges I see. The first challenge that we need to overcome is the one you touched upon, which is that there is still relatively poor understanding of what it is we actually do, and we need to demystify the products and services that we sell. There was an era in which we sold very simple products with assured returns, and there was a perception that there was no risk attached, and those products were very easily sold, and UTI itself with its 70,000-80,000 agents had in fact reached out to a very large community. But in today's world, post-liberalization, we are selling products that do carry a certain amount of risk, do need proper financial planning, therefore do need investor education, do need intermediaries, and those intermediaries need to earn a living as well. So I think that infrastructure has got to be recreated and put in place if our products are going to succeed. The second element is that the skills and behavior of the intermediaries also needs to adapt to the expectations of today. And that is also a work in process. The odd bad apple can cause a lot of damage to the industry as a whole, and we have to be careful that we don't allow those bad apples to contaminate what is otherwise a remarkably efficient and effective way to actually create wealth.
Would you agree with what Leo just pointed out?
India started reforming. The modern mutual fund is now 16, 17-year-old. And mutual fund still is not a mainstream way. And I think, there is a very fundamental problem or impediment to making market linked or, any investment which has little bit of risk or reasonable risk to become a mainstream investment, because, and that has something to do with our policy framework. One is that in India, somebody getting started at, starting his working life, his long-term savings is channelized into fixed income. That's the default. So when your long-term money gets into fixed income, anything which is market linked is a short-term money or a discretionary investment.
Right.
And then the expectations are short-term. And this is a very fundamental flaw in the way the government has actually channelized this.
Just taking off from where Dhirendra was, that we've traditionally been, households have been saving through fixed income traditionally.
Right.
And a lot of these fixed income savings have traditionally been in deposits. And I think when the banks got into distributing mutual funds, this is in the mid to late 90s, is where you'll see a lot of expansion of the number of folios, because I do think that banks took the lead in introducing the concept of a risk-based product initially to the fixed deposit customers and did a reasonable job over a decade or so, in expanding that. And of course, there was a natural advantage in having a savings deposit, base to be able to cross-sell to. to introduce the concept of risk and introduce the new product.
Sanjay, you run a small boutique firm. How different has been your experience from that of Vishal's? And how do you think you have actually been able to differentiate yourself, given that you did not have the advantages of scale, which probably Vishal had?
For us, basically, it was trying to find, clients initially when we set up. Was basically you had to walk into clients' offices when I probably began my career. And we had to leverage on other products which we were doing and then bring those clients into the mutual fund, fold. So if we were selling, let's say, there were some people selling fixed deposits, they would be converted to mutual fund clients. There was people selling tax-free bonds or other products. Those were the clients we actually brought into this market. And we would also look at corporates, let's say for treasury products, and then the corporate employees who were there, we would do an asset allocation for them into equity or, do a financial plan for them. We had to actually literally fight for every client and give them that kind of service, which he would be compelled to recommend us to other clients.
But do you think that it always works? Do clients always understand what the advisor is trying to suggest to him?
The way I look at mutual fund is that it is something which can democratize modern investments, modern savings in a risk mitigated manner to this large audience, and in a country which badly needs it, because if you have this fixed income orientation which is even high yielding, you end up being poor despite lifetime of disciplined savings. And so you have, and this is something which has not been broadly deeply understood by the Indian saver so far. They think that the saving is good enough and they will be taken care of. But having a liquid, modern, market-linked investment which can beat inflation, but that is not the primary driver. People come for a deal, and they have some short-term expectation.
Now, Vishal, if you could bring to our audience that what has been your experience?
I think there are customers of all shapes and sizes. We do have customers who have SIPs going for more than 15 years. But we also have customers who are worried about their SIPs 3 months or 4 months into their first investment. So that's the challenge, I think. And sometimes I think as advisors we focus on the technical aspects almost too much. Sometimes we have to just focus on the emotional aspects of investing. And that's one area where I think moving savers to investors is the large part of the journey that we have to help our customers through.
And how do you think, Leo, we can actually educate the advisors?
One is that financial advisors ideally are people from within the community, and they should know their clients. If you've actually achieved that, you've achieved the biggest part of the challenge. The second aspect is the more technical aspect, which is where we all tend to focus. What's the product training? What's the financial planning tools? These are now things which are actually quite widely available, and certainly UTI, we try and make sure that our advisors are equipped with this, and we should be doing more to do that. But the first part of it, only the IFA can really do, which is know your clients.
You're watching UTI Mutual Fund in CNBC TV 18's 5th Financial Advisor Forum. We are going to be back soon after this break.
UTI Mutual Fund and CNBC TV 18 present Financial Advisor Forum 2013-2014.